This is Shelley Kraft coming to you live on SNN Live. We're at the BioInvest Israel Conference in Haifa, Israel 2012. Standing with me is Dr. Pennina of Medica Venture Partners. She's a panelist on this conference, and ladies and gentlemen, a very highly sought after person for discussions at this conference. You're popular. What can I say? Ladies and gentlemen, Dr. Pennina Seifer, how are you?
I'm well, thanks. Thanks for setting this up.
And thanks for coming on to SNN Live. It's good to have you. I saw you today on the panel, and I said, I have to interview this woman, Pennina. And the reason was, it was a very interesting panel on VC.
And on not VC.
And on not VC and what's going on in the business. So please share with me, if you can, the highlights of what the panel discussion was about for our audience.
Okay. The highlights, kind of briefly. Basically, the focus is a lot of the companies are very frustrated by the VCs. They're not getting funded from the VCs. The VCs, especially in Israel, unfortunately, have not really raised new funds. If you look at a lot of the deals that are getting done, they're getting done by what I would call alternative investors, angels, family offices, other kinds of financial structures. And that's not a bad thing, because those are the guys that are funding the early stage deals.
Well, what I was saying to myself was, well, the VCs have had a pretty bad couple of year run, and they kind of need to hang on to some money to fund companies that they might already have money invested in. I've heard that said before. And, maybe it's that there was an opportunity for them to put money into companies that were a little bit further along than startups. So that's what I was thinking.
Okay, so there are a few parts to this. So first of all, VCs are answerable to their investors. They're LP investors, the guys who gave them money to manage, and they need to bring home returns. That's their job. Their job is not to build companies. Their job is to manage risk and to bring home returns to their investors. So if they've got an early stage portfolio and they see some later stage opportunities where they can actually bring the returns home sooner, it makes financial sense for them to do that. So that's one piece. The piece of keeping money for your existing portfolio companies, when you're in a portfolio management business, if you've got companies that are very promising, that you've invested in, that are doing well, you need to keep the money to keep them going, because one of the rules is if you don't continue to finance them, if you don't believe in them enough to continue to finance them, nobody else will. Nobody else is going to come in behind you and take it over. And actually what you do see is some of the venture funds are actually raising what they call annex funds. So additional financing so that they can continue to finance their good companies. Doesn't mean you should continue to finance the dogs. The dogs are dogs. Let them go. But the good companies that are doing well, that are making milestones, that are getting into the clinic, that are just moving ahead, you want to continue to finance those companies, because that's how you're going to get to your exits, which everybody says we're supposed to be getting to.
And the other part, as you segued into the exit comment, was how long are you supposed to stick around and wait? Because let me tell you, the pressure from the companies on the VCs is, don't worry, we're getting there.
And, here I come back to the VCs have a job to do. And their job is to bring the returns to their LP investors in a finite amount of time. Because the companies are pressuring, yes, I'm getting there. And there was actually an article in the Israeli paper not too long ago. Do you really want to wait 15 years for a return on your money? It's a fair question. And the issues of liquidity that VCs are dealing with are actually very serious issues. They're heavy issues because a lot of the LP investors don't want the liquidity anymore. And that's one of the reasons that the venture capital funds are having difficulty raising funds.
Well, my question then is, doesn't what's going on in the public markets have an influence also on the holding period for the VC and also for investors in general?
I need to think about that because you've got the public markets here and you've got the public markets, NASDAQ and things like that, which is a different story altogether. Here, the public markets have actually presented the Israeli companies with an alternative method for financing. You've got what would be considered by any investor in early stage company going public on the Tel Aviv Stock Exchange. It's a source of capital.
And it also adds a commodity to the picture.
I'm not sure what you mean.
Well, you can use the stock to trade, and you can do an acquisition for stock. Once
you get your stock liquid enough to do that, absolutely yes. And we've got a couple of companies that we actually did that. The gentleman I was talking to earlier, we just closed a deal where we merged one of our companies into a public company on the Tel Aviv Stock Exchange. It gave our company access to cash. It gave our company increasing runtime. And it's really a case of the whole is greater than the sum of the parts. And we think that the merged company is going to be a very exciting entity, and it'll be public in Tel Aviv.
What could be bad? And it gives the investors an opportunity to have a quasi-exit if they need be.
Quasi. It's not really liquidity for the investors. These shares are not. We have a lot of work to do before we can really exit. Drive that, work, build the company, drive the share price up, and then exit. But
ladies and gentlemen, I could keep going because this is my stuff. I love to talk about this, and this was a panel that I sat through, ladies and gentlemen. And now let me ask you one last thing. What do you look for in a company to invest in?
That's what you said you were going to ask me first. What do I look for in a company to invest in? It sounds very trite, but you look for the people. Because no matter what, and one of the panelists said this, no matter what the company is on the day you invest in it, it's going to morph into something different along the way, and you're looking for people that you can do the journey with. You're looking for people who are professionals, who understand what they're getting into, who understand that it's going to take a team of people, technology people, regulatory people, clinical people, reimbursement people, all across the board. You need a whole team of people to invest in, and you need a group around the table that can make the company fly.
Pennina's been speaking. I want you to know, ladies and gentlemen, her company is Medica Venture Partners, located in Israel. For more information, try to contact her. Dr. Pennina Sefer, thank you so much for coming on to SNN Live. I'll let you get a drink of water.
Thanks.